Welcome to Disruption Dialogues Podcast Season 2. Listen to the influential leaders and trailblazers from around the world as they share invaluable insights to navigating the fifth industrial revolution.
Hello, everyone, and welcome to another episode of Disruption Dialogues Season 2. I'm Vinod Chikkareddy, Chief Customer Officer at MarketsandMarkets. Today, I'm in conversation with David Budzevski, the Vice President of Global Product Strategy and Commercialization at Mastercard Gateway. The topic of discussion that we have for today's podcast is something which is going to be of interest to all our customers and viewers in the financial services segment and also on the consumer side of business. The topic is, are domestic payment methods becoming the preferred mode of payment for consumers? And to talk about this, David is here on the call on the podcast. David is a seasoned executive with over 18 years of experience in finance, specializing in commerce innovation. He leads a global team that develops go-to-market strategies and strategic partnerships for scalable product portfolios. Highly passionate about advancing the digital economy, David leverages his expertise in solution architecture and business strategy to empower global financial inclusion efforts. Welcome, David, to Disruption Dialogues.
Thank you, Vinod and Markets for having me. Looking forward to a fruitful conversation.
Thank you. So let's get started with just explaining what this topic is. So my first question to you, how have consumer preferences shifted in recent years? Have they really shifted towards domestic payment methods? And what are the key factors that are driving this trend?
No, thank you for the question. I guess the shift for consumer preferences really differs market to market. Fundamentally, as individuals in the ecosystem, we all have a preference to pay with, the card or mode of payment that we're most familiar with. Traditionally, it's certainly been facilitated or centered around the credit card or debit card that we'd have in our wallet, and we would very used to taking that out. As technology has evolved, we have now the ability to be able to digitize those payments through various wallet propositions, through be it the likes of Apple Pay, Google Pay, Samsung Pay, and the like. And that then gets even further, complicated with alternate payment methods like other wallets, be it the Giro Pays, the Grab Pays of the world. But when it comes to domestic payment methods, domestic schemes, we certainly have seen a growth and proliferation of those types of payment mechanisms globally. And a lot of that is driven by the fact that we have our primary accounts as consumers associated to a traditional debit card, and that debit card has been the means of payment or facilitating payments for goods and services on a day-to-day basis. But conversely, credit cards or charge cards have just as much value, and as consumers, we also have a heavy reliance on them. For most, we use the credit advantages that come along with credit cards, the 55 days interest-free, the protection mechanisms that come along with that. So has there been a growth in one payment method over another? I guess the jury's out. There isn't consistency across that. It does differ market to market. If I use Australia as an example, there is certainly a higher proportion of debit as a payment method that is preferred by consumers. And the market itself has really evolved to support that, with the government also taking steps to regulate how debit and credit is to be applied in the market, particularly at a merchant level.
Got it. And are you seeing any sort of differences between emerging markets versus developed markets as well in this regard?
The emerging markets we very much see, again, associated to more credit card-based payments, alternate payment methods that could be account-to-account or QR-based payments. It doesn't necessarily mean that it's linked to a credit card. It could be linked to a primary funding source, which could be a bank account. we've seen in the likes of Asia Pacific and China in particular, where QR has become the norm. The super apps are certainly the primary means of engaging as a consumer to procure goods, to groceries, through to white goods and other products, and that could have linkages either into a card funding source or a stage wallet, for example. So again, I think there's variances there across the different markets, but emerging markets, I think, are very much embracing or have embraced more the traditional credit products, but ultimately will mature into account-based products as well.
Understood. So that's on the consumer side. What are you seeing on the bank side? How are banks, not just state banks, but also the central banks, how are they serving, who are serving merchants thinking about payment options that are getting offered in the markets?
I think when we think about banks, it's important that we, I guess, segregate the different personas in the ecosystem. When you have an acquiring institution, which is fundamentally a licensed bank, there, they have an overriding preference to make sure that they can provide as many payment options to their merchants, who can then conversely provide as many points of interaction or payment options to the end consumer. So as an acquiring institution, their obligation is to provide as much optionality to the merchant, so that conversely the merchant can obviously serve as many possible customers that they can be domestically or abroad if they're selling products online through an e-commerce channel. And again, the role that providers like Mastercard or Mastercard Gateway in particular has is to similarly support that payment optionality. When we move into the central banks, the regulatory bodies, again, their goal is to drive, obviously, competition in the ecosystem and making sure that there's fair play, there's parity there. Consumers have the right protections and mechanisms in place, so they're not, I guess, defrauded and compromised in the payment experience. But conversely, merchants also have the ability to provide payments that are fair and equitable as well. So we're seeing regulation certainly drive a means where there's more cost neutrality in the ecosystem. Merchants are given the option to be able to effectively choose the routing option that transactions are processed by. So that could be taking a domestic scheme and preferencing that over an international and vice versa. And we see in the likes of the United States, where Durban's been around for a considerable amount of time, that routing optionality being there in itself. So, central banks have been playing a role for quite some time to be able to ensure that, as I said, there's fair play, there's parity in the ecosystem. Cost of acceptance is obviously at a point where it's fair for the merchant, but conversely not onerous for the consumer as well.
Understood. Yeah, absolutely. I think the governments and the regulatory bodies have a vested interest to make sure that the optionality is extended continuously. And clearly having more domestic payment methods help them build that consumer preference more widely into the markets. That's fairly understood. So we spoke about the consumer preferences, how they've been shifting over the years. We spoke about what banks and central banks are doing in their job of serving merchants and bringing up the merchant ecosystem. Another angle which has emerged in recent years is technology. While the financial technologies were fairly robust and I would say static for a few decades, the last 10 to 15 years have brought in a lot of technology advancements, right from mobile solutions, usage of digital wallets, and you mentioned QR codes earlier. How are all these technological advancements contributing to potentially a growing preference for domestic payment methods?
So the bottom line is that the proliferation of different payment methods is simply providing more choice for consumers, creating more inclusion for participants in the ecosystem, at a consumer, at a merchant level as well. And those payment methods drive a lot of domestic preference, and it could be by way of domestic account-to-account payments, for example. If you look at the Asian markets, where again we moved from a scenario where card was almost leapfrogged as a payment method, and it was QR code funded by, again, your domestic bank account or a domestic issued funding source that could be loaded into that wallet. So technology has embraced, and I think, the various proliferation of payment optionalities that are available globally. I think consumers, as I said, now have more choice than ever to be able to pay with mechanisms, be it that a domestic payment method, a domestic proprietary scheme, a domestic wallet, a domestic account-to-account based payment. And conversely, merchants are also now having to provide, the ability to support that growing proliferation of different payment methods. And it's how the ecosystem can ensure that those merchants are well empowered and have the ability to be able to consume those different methodologies of payment. So we are creating an inclusive ecosystem. All consumers are free and equal to be able to participate and buy goods and services online, in store, or through whatever channel best suits them. And the channels themselves are also evolving as we know. We know the traditional, POS, in-store, online flows as well. Those are being augmented with, omni-channel experiences that consumers, that merchants have access to be able to better understand the consumer flows that are moving through their footprint, being able to offer therefore more targeted loyalty offers or experience for a consumer, irrespective of whether the buying or funding method is a domestic payment method, is a global payment method, is an alternate wallet or a stage wallet solution. So yeah, fundamentally the ecosystem is there to make sure that we can support the various needs of both the consumer and the merchant, whilst also making sure that we collectively abide by the regulatory framework that is in place globally.
Got it. Yeah, absolutely. I think in most other industries, as here, the technology is playing the role of a lubricant and maybe a faster engine, which reduces friction as well as helps you do things in a faster way, which was otherwise not possible in a pure analog world. When we think about, I know we already spoke about central banks and their motivations towards offering domestic payment options and so on. The question is a little more nuanced now. I wanted to understand from you, David, how are you seeing government policies and support affect the adoption of domestic payment methods? Do you see any specific initiatives that have finally gone ahead and influenced consumer behavior? Have the government bodies been successful in their outreach efforts, in their ability to influence how payment methods are adopted?
I would say, Vinod, the government policies haven't necessarily driven consumer adoption. It's very much centered around the merchant and ensuring the merchant provides the various forms of payment there to support the consumer. My fundamental belief is that consumer preference should take priority, and having an environment where you and I as consumers are able to transact with the mechanism that we prefer and that makes sense for us is paramount. And regulatory intervention into that process should go as far as making sure that the funding source is a legal funding source, the funds that are coming from that source itself from legitimate sources, as opposed to confining you or I into having to pay with one specific method or another. In saying that, we are seeing certain markets globally look to create more empowerment for merchants, and there's implication on the merchants with the various costs of acceptance that go along with being able to process payments and participating in the e-commerce or just the general commerce ecosystem. So there we do see different postures being taken by regulatory bodies on what rights the merchant has to make decisions on routing transactions, on managing their costs, and conversely, what surcharging abilities they also have to apply to consumers, which therefore does impact you and I as consumers as well. But I want to take a step back, if okay, and sorry, this is a bit impromptu, but as a consumer, get your perspective on, what are your preferred methods of payment, and are domestic-based payments for you, the primary means of facilitating transactions, Vinod?
Yeah, it's a great question, and honestly, as a consumer, I wouldn't care too much. All I want is frictionless behavior. If I have my phone with me, I want to be able to use it as a wallet. If I have my card with me, I should be able to swipe, tap, do whatever it takes. I honestly would not be too worried whether it is one payment option over the other.
Yeah, it's fascinating, and I agree with you. For me, it's whatever best suits me at that point in time, and most likely it's taking out my cell phone and tapping on a device, or if it's online, it's using my Apple or Google Pay, I should say, wallet to be able to facilitate the transaction. And it's really centered on trust for me as well. So as a consumer, I want the convenience factor in being able to make the payment, irrespective of how that is, whether it's a card, whether it's a bank account, whether it's a Stage wallet or not, but also ensuring or knowing that I have the security. So it's not compromising convenience for security, and a lot of the time we see convenience becoming the overriding factor that leads to insecurity, I should say. So that's I guess for me how I personally reconcile the payment flow.
Yeah, that's a great point you made, David. I mean, when I think of myself from a consumer perspective, like I said, it's my phone, my card, but online seems to be a slightly different ball game. I still find myself thinking twice when a merchant says, do you want to save your card details? Let's say I go to an e-commerce site and the company says, can you please save your card details? I'm still thinking, is it safe? Because every other day you're seeing all these details about how 1 million public records are in the dark web and so on. So yeah, I guess with online, the whole thing is still a question mark. Trust and security, they've come a long way, to be very clear. But I think there's still a bit of a question mark there on how they are securing it. And with the dark side always being one step ahead of the light side of the force. I think it's a race. It's a race between the hackers and the ones who are trying to protect consumer assets.
Yeah, absolutely. It's funny you say that. I was at a conference a few weeks ago in Berlin, and that was the theme of a lot of the conversations. Is how do we stay as an industry ahead of these bad actors that are out there? The actors have moved away from looking at the card as the point of weakness. There's been so much innovation there around EMV 3DS, tokenization, and those products continue to evolve and become even, I think, more frictionless for us, which is fantastic. But the attack vector is now you and I as individuals, and the weaknesses that we have as individual characters that can pry on our vulnerabilities, be it through romance scams and all these other types of scams that then compromises our identity and the like. So yeah, it's diverging from the topic of domestic payment methods, but fundamentally it all goes hand in hand at the end of the day, doesn't it? A domestic payment isn't different to any other payment method in my mind, and the same levels of trust and security need to be there for the consumer to be able to continue to utilize that product and have confidence that their transactions are protected, their identity similarly is not going to be compromised, because when you look at the dark web, and for those folks who've had the opportunity to spend a bit of time there, the amount of information that can be found there is quite scary.
Yeah. It only goes to show, David. I mean, from a consumer perspective, it's hard for a consumer, at least a majority of them, to think about why a domestic payment method would be preferred over a alternate payment method. It's really about, as we said, convenience and trust. So whichever option offers more convenience and trust, I think trumps over the others, at least from a consumer perspective.
Agree.
Which brings us back to thinking about the consumer side of things, right? So we talk about all these domestic payment methods versus other methods. Do you see any ways in which domestic payment methods are being seamlessly integrated into the daily lives of consumers? And does this integration contribute to them preferring domestic payment methods over other methods? Have you seen some trends already emerging there?
Well, absolutely, and there's very mature markets where your domestic payment methods are well adopted and entrenched in the consumer day-to-day experience. We take the Nordics markets again, for example, where you have the likes of an Ideal, which as an app-based payment method is there and is the primary means of payment for consumers. In that region of the world, I think its penetration is over 60% from memory. So that as a domestic and an alternate payment method away from your traditional means of payment, your carded-based payments, is clearly a fantastic use case of how consumers have embraced a different channel, a different means of payment. Again, you look at Asia, for example, where the adoption of the Alipays, the WeChat Pays as payment methods has again proliferated, and that's not a new phenomenon. That's been around for a significant amount of time. But again, that as a means of payment is the proxy for citizens within China, as an example, and within the greater China region. Also, we're seeing the emergence of account-to-account based payments in the sub-Sahara region really start to take some really good traction as well. And again, consumers seem to have a preference for being able to pay with their funds in their bank account through an application that is linked back to their banking institution and facilitate a direct transfer of funds. And no doubt, as open banking continues to capture, I guess, the many economies, will see even more adoption for that as an alternate method of payment, where your ability to make payments from your banking account will become more and more prevalent beyond markets that we've seen today. In Australia is a really good example, where you have the new payments platform that's done a fantastic job in building the foundational layer of the ability to facilitate account-to-account payments. And now, as consumers, through your banking application, you have the ability to be able to send funds, peer-to-peer, quite simply through a mobile phone. By linking that, you can pay your bills through that same mechanism as well. So there will no doubt continue to be quite a significant, I think, evolution in the different payment options that are available to us as consumers, to merchants as well, that'll evolve. They all have to coexist because consumers are wide and varied. And as I said, the needs of the consumer differs. As a tourist, I may have a preference to pay within the method that I find the most safest and the most trusted. You may have a domestic, you may be looking to buy your goods and services or your groceries at home in your home region, and that may be through a local payment method. Could be a RuPay, for example. It could be UPI. It could be something else. So again, the ecosystem has to be able to accommodate the varying and diverse needs of the consumer.
Yeah, I think great conversation. I know we are almost at the end of the conversation here, but I just wanted to ask you one more question. Does this proliferation of payment options create too much complexity for the merchants? What's the merchant perspective in all of this?
Yeah, that's a great question, particularly when we think about the online experience, when you have a piece of real estate in the checkout that may be inundated with different options there. So there could be scenarios where, yes, there may be too many options, and that drives to consumer abandonment of that cart because there's just, where do I go? What do I select? Is this even a safe experience that I'm looking to transact with when there's so many options there? I think merchants will certainly be supported and have will understand the needs of their consumers in the market that they operate within. There'll be market participants through their PSPs, gateways, who will support them to make the right decision. And we as Mastercard also have a role in educating and making sure merchants provide the best payment methods for their market and their needs as well. And that goes beyond just simply accepting a card. As we've been speaking about the last 40 minutes, it could be an account-to-account payment, it could be an alternate wallet, it could be any such means. So I think there's enough education and support in the ecosystem to be able to make sure that merchants are well equipped to make the right decision for them. And there's tools as well, and we've seen the both peak and trough of buy now, pay laters, but there's A/B testing that merchants can do with different be it buy now, pay later methods or alternate payment methods to see what is the most adopted for their consumer set that they're serving. It won't be a one size fits all. It will differ merchant to merchant, market to market, payment method to payment method. So it does need to be a level of, I think, information and education there to support the merchant.
Super. Thank you so much, David, for all these thought-provoking responses. I think our audience would definitely walk away with some new thoughts and new insights into what's happening in the world of payment methods and how domestic and international payment methods are maybe collaborating with each other, all towards making sure that the consumer has a better experience. And
thank you, Vinod. It's been hopefully an informative conversation. Appreciate your insights as well as a consumer, and as you said, hopefully this experience has or will impart some additional insights to the listeners of your podcast.
Thank you. Thanks, David. Thanks to all of our audience for listening in. I was in conversation with David, Vice President of Global Product Strategy and Commercialization at Mastercard Gateway. Thank you, David, once again for demystifying this space for us. And to our audience, stay tuned for more such interesting episodes on Disruption Dialogues.
Thanks for tuning in. If you want to know how you can navigate and thrive in this disruptive era, subscribe to Disruption Dialogues on your go-to podcast channels and stay tuned for more interesting episodes.